BlockVira.com presents itself as an international investment fund, but everything by its structure reveals a short-lived Ponzi scheme carefully wrapped in the language of global finance. The site offers polished visuals, broad promises of diversified portfolios, and claims of secure long-term wealth strategies, yet its foundation collapses immediately once any real verification begins. The domain was registered in the middle of November 2025 and has no prior history. The company behind it is hidden behind NameCheap privacy layers, and the so-called legal entity, BlockVira Trading LLP, is tied not to an operating office, but to a mass registration mailbox in London. The project is entirely unregulated. It does not appear in the Financial Conduct Authority's registry. It has no oversight, no reporting obligations, no legal permissions to offer investment services, and no connection between the website and any registered company that could legitimately handle client funds. Although the platform attempts to imitate real financial institutions, the core of its offer immediately exposes its fraudulent nature. BlockVira advertises fixed daily profits ranging from 20 to 60%, attaching these numbers to categories like crude oil, renewable energy, real estate, retirement planning, and gold. Such returns are mathematically and economically impossible, not only in conservative sectors but even in the highest-risk speculative markets. No real investment firm anywhere in the world can guarantee a double-digit daily yield, and no market behaves in a way that could sustain it. These numbers appear only in Ponzi schemes, and the structure of BlockVira's plans directly mirrors dozens of short-term HYIP templates that circulated between 2018 and 2025, where promised profits were paid out only as long as fresh deposits continued to arrive. Once inflows slowed, the platforms disappeared, taking all remaining funds with them. The website attempts to compensate for this implausibility with references to multiple industrial sectors, suggesting that profits come from complex, diversified strategies. Yet BlockVira provides no trading platform, no proof of market activity, no analyst reports, no performance history, and no evidence that any investment operations occur at all. Instead, everything on the platform, from registration to deposit collection, is designed around isolation and anonymity. The only contact method offered is a generic email address. There is no telephone number, no compliance department, no risk disclosures written by licensed professionals, no names of directors, and no transparent ownership information. A legitimate institution cannot function in such secrecy, but a Ponzi scheme relies on it. The use of a British-sounding LLP structure does not make BlockVira legitimate. In the United Kingdom, LLPs can be registered in a single day without needing to demonstrate financial expertise, real offices, audited reports, or operational transparency. This makes them a preferred tool among international fraud groups that want to create an appearance of European credibility while avoiding regulation. The address listed on the website, 30 Crown Place in London, is known for providing virtual mailboxes to hundreds of shell companies with no physical presence. No evidence exists that BlockVira Trading LLP conducts any financial activity or even operates beyond its registration entry. Without an authorization from the Financial Conduct Authority, it is illegal for the company to solicit or manage investments, hold client funds, or advertise itself as an investment service provider. BlockVira's technical setup reinforces the conclusion that the project was created for short-term exploitation. The hosting is inexpensive shared infrastructure. The entire website is built on a pre-existing template commonly used in high-yield investment programs, and all identifying information is hidden behind anonymization services. These characteristics have been repeatedly documented in fraudulent schemes that operate for several weeks or months before abruptly shutting down, leaving investors without access to their accounts and without any legal recourse. Because the company is unlicensed and does not maintain verifiable offices, victims cannot pursue regulatory complaints or enforce claims against a legally recognized entity. The real danger lies in the predictability of the outcome. A platform that promises 60% daily returns is not designed to generate wealth. It is designed to gather deposits quickly by exploiting financial inexperience and the psychological appeal of rapid profit. In practice, such schemes follow the same pattern. First, early users see fabricated profits displayed inside their dashboards. Some are even allowed small withdrawals to build trust. Then, as deposits grow, withdrawals begin to fail. Clients are asked to pay additional fees, taxes, or verification charges. Eventually, access to accounts is disabled, communication stops, and the website disappears. Every major indicator present in BlockVira aligns with this pattern, from its unrealistic profitability claims to its non-existent regulatory status. Taken together, the evidence is overwhelming. BlockVira is not an investment firm. It is a high-risk Ponzi platform constructed on a newly registered domain using a virtual British address, an unverified LLP, anonymous contact channels, and impossible financial promises. Its purpose is not to manage capital, but to drain it, and any funds sent to BlockVira should be considered at extreme risk of complete and permanent loss. If you have already transferred money to BlockVira or a similar platform, you should seek immediate assistance. The sooner action is taken, the higher the chance of recovering lost funds. You can contact us at watchdogonlineiproton.me, leave your name and telephone number, and our team will guide you through the next steps. We work to protect users from fraudulent schemes, and together we can make the digital financial space safer for everyone. When a website promises 60% daily profit, the only guaranteed result is that investors lose 100% of their money.